Success is about doing the right thing, not about doing everything. Gary Keller. And my friends, the right thing for us is 10 to 15 minutes every day. Not doing everything. You don't have to stand around, sit around, spend 2 hours a day, 30 minutes a day. 2 hours on Saturday. It's none of that. It's 10 to 15 minutes a day following price movement. That is what is so critically important, is learning the nuances day after day, day in and day out. The market's only open at the most 5 days a week. If you can devote 10 to 15 minutes, you can figure this out. Now let's jump into these charts and see what's happening in the market. As the week moves along, we see everything's up for the day except the S&P down 0.03%. So almost flat. Look at where we are this week. We see that again, we've reached a higher high. We have a green up candle. Price percent oscillators pulling away from the red signal line. Derivative oscillator gaining upward momentum. Now as we dig a little deeper, we see that the 2-day chart earlier in the week, Monday and Tuesday, was a green up candle. The high there was 367.68, 368.19. So the Wednesday, Thursday 2-day candle that ended today has moved higher. Price percent oscillator still moving up. Looks like it's losing a little bit of energy. Derivative oscillators losing energy. Go to the half-day chart. And again, pretty much laminated. Looks like it's getting closer to moving over, going down, but it's right there on that 4-hour trend line. Up in the morning, red spinning top, open box spinning top. In the afternoon, a slowdown in the up movement. So we'll watch, wait and see how things continue to move along. But of course, the 2-day and the weekly still moving in the right directions. After that weekly vertical crossover, took it a while to get going. Back on the 13th. Now, we leave the S&P 500, go to the NASDAQ 100, and we see it's up 0.14% for the day. Are we going to get a crossover? Well, you need to be looking for that. We see a green up candle for the week, and when we look closely, we see the PPO is at 145.49. If you look on the left-hand side of the screen, I can't move the cursor over there because I'm holding the cursor down so you can see the box. But if you look below that first bold line, the first horizontal line, you see PPO 1024. You see it's 5.49, and you see the 8-period moving average 5.51. That means it hasn't crossed over. We don't ever like it to be that tight anyway because you can have a bounce off, but we'll see. Maybe things will be up on Friday. What you want to do, since we have a weekly vertical crossover potential tomorrow at the close of the market around 3:50 p.m., check to see if indeed we have a weekly vertical crossover or not. You can do the same thing I'm doing. Check. Maybe it's visual. Hopefully it'll be much more bold if we have a nice up day on Friday. Now, if it's a down day, no, not so fast. So it'll just stay negative. We'll wait for another potential opportunity. So just keep that open. Hope you're filling out your daily market worksheet and you're marking this down and you're putting it in perhaps your iPhone, your Android. You're setting an alarm to go off about 3:45 that will tell you to call up your charts and see where things are on the NASDAQ 100 QQQ if you're going to have a weekly vertical crossover. That is our jumping in point when those occur. Now, again, we'll be watching for that. We look at the 2-day chart, and we can see that the prior high was 305.14, 305.88, so it has gone higher the last 2 days a little bit. Again, these aren't surging strong upward, but they are moving up. So we see the derivative oscillator gaining upward momentum, price percent oscillator losing a little bit of momentum, still heading up. And we can see where things look like they're topping on that 4-hour. So again, watch, make good decisions. Oh, and a great video for all of you subscribers. If you're not a subscriber, you can subscribe for free going to chartingwealth.com. And we have a great training video for you today. I was talking yesterday about backtracking, using stock charts to find trading patterns. This tells you all about that. That is going back in time and seeing how well the weekly vertical crossovers, the 2-day recrosses work, how to use those to find trading patterns. Extremely important for you to do. Redrawing trend lines there, always good to do. You only draw trend lines when, of course, those candles have finished drawing. That's easy to do quite often on the half-day chart. You only get a new candle drawn every 2 days on the 2-day, and on the weekly, once a week. So that is where we are as far as stocks go. Let's leave stocks, go to bonds. Bonds up for the day, 0.81%. We have seen what was a red candle get smaller and smaller and smaller as the wick stays there. We see the price percent oscillator is still down. Derivative oscillator negative, but losing a downward momentum. We have a red spinning top, solid red, after we've had that original down movement and then pulling back. We look at, excuse me, the 2-day chart. What do we see there? Well, we see, again, a red down candle. Price percent oscillator is heading down, but no crossover going down. That did not happen, again, because we had the up movement during the day. We see that the price percent oscillator still positive. Derivative oscillator losing momentum, but still positive. Go to the 2-day chart. And, of course, we had this beautiful 2 days of down movement, nice stair steps, nice trend line. And what happened? Up in the morning and up in the afternoon, price percent oscillator's gone flat on the half-day chart. Derivative oscillator lost momentum. So we didn't have that 2-day recross going down. That's okay. We'll continue to wait, watch, and see what the market has in store for us when it comes to bonds. Now we go back to the weekly. We go to gold. What's up with gold? Gold up for the day, 0.79%. We again started off with some down movement in gold. We did reach a lower low this week. The low, 166.03. The prior low, 166.78. So about 75 cents lower. How'd you like that math on the fly? Again, for someone trained as a lawyer, I'm sort of proud of that. Now, what do we see going on with the price percent oscillator? It has lost some of that downward movement. Derivative oscillator still heading down. And again, still overall mood in gold is down. We go to the 2-day, and of course we do have, over these last 2 days, some strong up movement in gold. Price percent oscillator is still negative on the 2-day chart. Derivative oscillator negative, losing downward momentum. Price percent oscillator's headed up, albeit negative. So we'll continue to watch, see what's happening there. What do we see on the half-day chart? Again, 3 days of solid up movement in gold, continuing to just move on up and out. So we'll continue to watch that and see if and when we have an opportunity to go short on gold, excuse me, again, or if gold's going to turn around on that 2-day and perhaps finally, we'll drag the weekly over too, and we'll have a weekly vertical crossover at some point. We can watch gold start flying up again. We'll wait, watch, and see. That may take a while. So that's where we are, folks, as we end the day on Thursday, go into Friday. Hope you're filling out your daily market worksheets. Remember, at the close of the market tomorrow, we fill out our weekly market worksheet. If you want to get started using these worksheets, at least start doing the weekly. Will you do that for me? And every time you do a practice trade, do a trade worksheet. I'm going to put, again, at the end of today's video, our training videos on how to use the worksheets. You might be saying, where do I get those worksheets, Tom? Guess where you get them? You get them in your show notes. If you're a subscriber, the PDFs are loaded up there for you. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.